Good evening. Today on Mango Spaces, we're hosting a discussion on the path towards affordable home ownership. And our guests for the day are from KMRC. I'd give them a chance to introduce themselves. We'll start with Olive. Tell us what you do at KMRC.
I'm Olive Gitao, and I head our internal audit function at Kenya Mortgage Refinance Company. And KMRC is an institution, an organization that is set to provide funding through our financial institutions to help Kenyans in home ownership. We will talk more about it even as we proceed. So I'll just give Eric an opportunity to say what he does at KMRC. Thank you.
I'm Eric Wambua. I manage the finance function at the Kenya Mortgage Finance Company, and it's a pleasure to have us all. Let's discuss the path to affordable home ownership, which is what KMRC is all about. Thank you.
Oliver, Eric, can you give us a breakdown of the current landscape of affordable home ownership in Kenya and probably the key challenges that potential homeowners face?
Okay, I can take that. Okay, let me begin by giving context in terms of what is it that we call affordable housing, how has the government defined it. So you'll find that affordable housing has been defined under the Kenya National Housing Policy. So there is a Kenya National Housing Policy that was developed in the year 2016 by the Kenyan government, and it talks about affordable housing being adequate housing that costs not more than 30% of the household income per month, either when you're renting or you're buying. That means now you're making your payment, your mortgage payment. That's what now the National Housing Policy defines what affordable housing is. So when you're making your rent payment, it should not be more than 30% of combined household income. So that means your house should be reasonably priced, housing within the financial means of your particular income threshold, how much you're earning. So you're defining it based on what you earn as an individual and as a household. So household, now they 30% of household to accommodate the combined income of the two parties. If it is a family setup, then husband and wife. If it is an individual setup, then your single income is the one that is considered. So it typically sets to ensure that as an individual or as a family, then you can be able to afford other necessities while maintaining your housing. So 30% is to allow you to be able to do other necessities that are required for normally day-to-day living. Transport costs, moving from one place to another. You should be able to have adequate income to cover that. If you're educating yourself or your family, you should have adequate income to do that. So that is where all that's coming from. And when we talk about affordable housing, where KMRC comes in is that we try now to provide affordable cost to be able to get a Kenyan that house within that definition, or you should not utilize more than 30% of your income, combined income for the house. So that is generally how the affordable housing is defined by the government. Now, when we come to statistics, then you realize that in terms of housing generally in Kenya, there is a study that was done sometime last year by Habitat for Humanity in conjunction with KMRC and Association of Microfinance Institutions. And what they found as at last year is that we have 80% of Kenyans own their homes in rural areas. Now, in the urban sector, about 41% own their homes, but we have a whole lot of 59%. Now, we come closer home because you'll find that a lot of studies that have been done cover mostly Nairobi and its metropolis. In Nairobi, you will find that only about 33% own the homes where they stay in, and those we have a whole 67% renting. And of course, the other metropolis is Kajiado, Machakos, and Kiambu, whose also statistics is also very different. When we now bring all those statistics together and based on what the Constitution states, Article 43 of the Constitution states that every person has a right to accessible and adequate housing and to reasonable standards of sanitation. Now, accessible could now be talking now in terms of you can be able to access funding to get yourself a house in a more affordable way. And when now we talk about adequate housing, there is even another definition based on the national policy, the Kenya government national policy. When it talks about adequate housing, it's just stating a place where you can easily access, has adequate security, the structure is stable. So when we find ourselves in instances where we have structures that are coming down, then that means that is not adequate housing that has been provided. So adequate housing also includes adequate lighting, heating, ventilation, adequate basic infrastructure. So that's what we're talking about. And in addition to that, all these should be available at an affordable cost. Now, that part of available at an affordable cost is where now KMRC comes in. Because what we are doing is providing that funding to be able to get this adequate housing at an affordable cost. And that's what we are talking about today. I think I will look at that for now. Thank you.
Okay, so I can see Nam is back.
So maybe you can tell us a little bit, what is their ownership and business model of KMRC, and what are the value proposition and your target audience?
So I'll take us through that. So ideally, KMRC is a company that was formed by the national government as well as some other primary mortgage lenders. And so ideally, we are a financial institution that is non-deposit taking and is established under the Companies Act. Now, in regard to the mandate, primarily, or actually, we are just a one-purpose institution, and that is to provide long-term funding to our primary mortgage lenders, in this case, who are the banks and SACCOs, for them then to on-lend that money to Kenyans affordably. And so that's our sole purpose and mandate. Now, in terms of ownership, as I mentioned, we are a public-private company owned 25% by the government of Kenya through the National Treasury, and then private sector players own the balance of 75%. And these private sector players include banks and SACCOs, as well as some development finance institutions. Now, in terms of funding, the institution is primarily funded through debt. And in this case, equity, of course, is the contribution that our shareholders paid in for them to become shareholders of the Kenya Mortgage Refinance Company, and that forms our core capital. And then debt is now the money that is available for us to lend. And this could be in terms of the credit lines from development finance institutions through the government, of course. And it could also be the money that we are raising from the capital markets. But really, our source of funding is actually just debt and equity, and the debt component of it is the funding that is available for us to lend. Based on that, of course, we've had several milestones. We've disbursed a total of 10.4 billion to date gross, and I think having started business in 2020, I think we've done well. That 10.4 billion is actually to 12 primary mortgage lenders, and in this case, when we say primary mortgage lenders, we are referring to the institutions that any Kenyan would walk into and access a mortgage. So you can walk into a bank, you can walk into a SACCO and access a mortgage. And those are the ones we are referring to as primary mortgage lenders. So 12 of them have actually been able to access funding from KMRC. And this 10.4 billion has gone to around 3,300 mortgages. Again, I think that's in the right direction. And that 3,300 mortgages, actually 46% of it has gone to women. So we are very proud that KMRC is promoting women home ownership in the Republic. And when we say that a household generally has got 4 people, generally, and so if it's 3,300 mortgages, it means then over 12,000 Kenyans have actually benefited from the KMRC funding. Thank you. I think I've answered your questions.
Thank you, Eric, for that good answer. So I think only now you can tell us, how does KMRC contribute to facilitating affordable housing?
What KMRC is doing is providing affordable credits to Kenyans through our partner banks and SACCOs so that they can be able to own a home affordably. So affordable credits can refer to loans that are provided to you as an individual or to the house. Some households will pick a mortgage or a loan, a house loan through their combined income. So a home loan that is favorable, the terms are favorable, the conditions are favorable, and they align with your financial capacity. So that means that whatever your income is, when it is combined, the 30% that we allocate towards that house should be able to afford you a home that you're comfortable to live in. So in that case, we are talking about interest rates that are reasonable. And in this case, KMRC is offering that. We are offering interest rates that are less than 10% through our partner banks and SACCOs. So as Eric defined, we are a wholesale lender. We refinance the banks and SACCOs. You will go to your respective bank or SACCO. You will go to them and ask them, oh, I have identified this house. I want to buy it. Then they will give you a home loan. Or probably you have land and you tell them, I want to build. Then they will give you a construction loan to build. Boom. Now, once the bank or SACCO has given you that loan, they will come to us as KMRC and we will refinance them the amount they have lent to you. That is how now we come in. So the lending we are offering the banks, SACCOs, is at a concessional rate because we have obtained funding from our stakeholders who are multilateral agencies, in this case, the World Bank and African Development Bank, at very concessional rates. And so we are lending to the banks and circles at less than 6%. And then they get to connect to you at less than 10. So our value proposition to the Kenyans is they are going to get a fixed rate of less than 10% for up to 25 years, which now is based on now your credit appraisal, which look at probably your age, your source of income, when now you're going to be assessed by your respective bank or circle. So we are offering less than 10%, which is fixed for a repayment period of up to 25 years. And you can access now from our partner banks. Now, we also have threshold for affordable housing in terms of how much you can access through the KMRC funding is up to 10.5 million. And then your income threshold should be within 200,000 and below to be able to access that kind of funding. That will be able to get you funding through the funding you obtained from World Bank or Africa. Back to you, Nancy, and thank you.
You actually moved your upper limit of beneficiaries to 200,000, and that is 10.5 million in terms of loans as well. And that figure was lower previously. What informed that decision to move that figure up, and was it was a necessary move to make? And are there any results that have come out of moving that limit to 200 from 150?
So thank you, Namsia. I'll take that. Yeah, so you've read mentioned that previously the upper limit of our beneficiary was 150,000 in terms of household income, and we revised that to 200,000. And then the loan limit was also revised to 10.5 million as the upper limit. Now, I think we all have seen what has been happening in the market. So this was driven by several factors. We saw changes in macroeconomic factors where the disposable income, the income that one remains with after received the income, then was reducing, and therefore the demand capability of the Kenyans was going down. And the changes in macroeconomic factors, therefore, was one of the biggest considerations. And then we saw an increase in the cost of construction, and the increase in the cost of construction then led to an increase in the cost of those houses. And therefore, the house that whoever was earning 150,000 before would afford would not necessarily have been able to afford that following those increases. And then we were also intentional about expanding the beneficiaries. Because again, we would like to target all Kenyans, and therefore we felt that by us revising those low limits upwards, then we would be able to onboard a few more Kenyans who would then be able to meet our eligibility criteria. Now, has it yielded positive results? Of course, yes. I think I've just mentioned about the kind of disbursements that we've been able to make, and we are seeing very good progress even now. From January to date, we've actually made several disbursements. And generally, we've seen an increase in the level of uptake as compared to before. And therefore, the increase was actually beneficial. It has yielded positive results. And we're hoping that more Kenyans will continue to enjoy the benefit as we proceed. Thank you.
Well, when we talk about housing and affordable housing, mostly the informal sector, the sector that always remains underserved. These are people living in the slum areas. These are people living in the household that does not actually picture the Article 43 that is said in the Constitution. As the KMRC, what are some of the constraints that inhibit this particular sector? And are there any opportunities or initiatives that KMRC are doing that you can see the offers that we have lost to this informal sector or to this group of people particularly, so that they can also be able to say we also benefited from affordable housing? Because most of the time, affordable housing has been spoken since years and even up to now. But is the informal sector and that group of people, how are they ever going to see benefit from this affordable housing?
Okay, thank you, Namsia. So I think probably I will just give one more statistic in terms of actually what is talked about in terms of access to housing finance. From the study that was done in 2023, it was found out that about 56% of those who own homes are able to own their homes by accessing a financial product. So it could have been a loan, but they were able either from a bank or from a circle. Could have been a normal incremental loan from a circle, or could have actually have been a home loan. And then about 4% of those, these are those who are formally employed. Now, we come now to the section of the people that you were talking about, those not formally employed, those who are running their own businesses in the informal sector. And what the study found out is about 29%, only 29% of those who are not formally employed, mostly those running their own business or in the informal sector, were able to access funding through a financial institution. So we have a whole 71% who have not been able to access our financial products to own their home. Now, this is now where we identified that there is a gap and there needs to be something that needs to be done about it. So you will find as KMRC, we are pushing for a value proposition of less than 10% interest rate towards a home loan for a long repayment period and at a fixed rate. What we are doing is we are working with the financial institution to roll that out further down, not only to the employed, but also to those who are self-employed. We are saying that this benefit is to all Kenyans, as long as you're a Kenyan and you have a consistent source of income. So here, the parameter to look at is just the consistency of your income. However you get your income, that should not be a problem. It could be in business. It could be you're doing a business in the informal sector. You are included in this, in terms of this funding for you to be able to own your own home. In addition to that, we are moving further because we've realized that our partner institutions, they also have their own mechanisms that they look at in terms of risk management, credit appraisal. And of course, traditionally, most of these financial institutions have been risk averse. So they tend to lend more to those who are salaried as opposed to those who are not. But because of that, and to be able to help de-risk them, we as KMRC, we are coming up with a risk sharing facility that will help to de-risk these financial institutions so that they can be able to lend further downstream to more informal sector players and individuals. Now, even as we do that, it is very important for us to identify and to understand that we have two other classes of income and housing solutions that are there. Now, once KMRC is looking at the mortgage gap that is there in terms of funding, it's important to identify that there is also what we call social housing, and we also have what we call low-cost housing. Based on our income threshold up to 200,000, and this depiction and segregations are clearly defined in the National Housing Policy. So social housing is usually designated for individuals earning 50,000 and below. And you'll find this is about 2.6% of our population of formal income. This is as per the Kenya National Bureau of Statistics. Now, we have low-cost housing, which is individuals who earn between 15,000 and 50,000. Now, this bulk of the Kenyans are 71.8% of the formal income earners. This is where they fall under low-cost housing. And you will see that the government has been very deliberate to want to actually address this area. And then now there is what we call the mortgage gap house. This is where you have individuals who are earning between 50,000 and up to our income threshold of 150, which we have now increased to 200,000. And this accounts to about 22.6% of formal income earners. So in terms of our product, while of course it can apply all the way to social housing, you will find that for you to be able to get a mortgage that is reasonable and within the mortgage gap, then you fall within that income threshold of 50,000 and above. But otherwise, you can still be able to get that home loan even when you are at less than 50,000, because it all depends on the house that you identify. And if the 30% of your 50,000 will be able to take care of your mortgage gap. And this is where your housing needs. And this is where now the government comes in terms of supply. Because as KMRC, we are providing funding for the end user, the Kenyan who wants to own this home. But for that Kenyan to be able to own that home, they need to identify that there is a home to be bought, or they have land that they can actually be able to build that house that is probably worth 2 million for them to be able to pay their 15,000 or something like that. And so the government now, through the State Department of Housing and Urban Development, is coming in to work with developers to put up these houses that now will be able to take care of social housing and low-cost housing. And but for KMRC, we are able now to fund all the way to the mortgage gap. And now that means the house you identify doesn't have to be a government house, government-built house. It can be a house that has been built by a private developer, but falls within the threshold that can be covered. And so that means we as KMRC, we are very deliberate about going further downstream to the informal sector. And we are working with our partner banks and circles for them to be able to provide that solution to them as well. I hope I've been able to answer it.
Yes, Informal. You mentioned a very important thing about going down to the end user and providing that service. And I would like to ask you a question about that, but I don't know if it's you or Eric will handle that. But before that, let me just invite people in the audience to send us your questions in the DM, send us your questions under the comment section. We'll be able to take up the questions, and even just something to the KMRC, you can tell us in the comment section. We'll set them up in a short while. Only you mentioned that you're actually providing a service to the very end user here. And you also mentioned that you're refinancing banks and schools who are actually giving mortgages to individuals. Do you, as KMRC, give loans to individuals? Do you finance individuals? Or you just circles and banks?
I'll take that. I think we mentioned at the start of our conversation that KMRC is a wholesale institution. So by wholesale, then it means that you cannot walk into KMRC and request for a housing loan. Now, this is actually very intentional because KMRC was not coming in to compete with the banks. It was coming to complement what the banks were doing. And so we just took advantage of the already existing structures in terms of mortgage ownership to plug in. And that basically means that you can access the KMRC product, yes, but then through our member banks and circles. So you'll need to go there and then they'll consolidate as many Kenyans as possible through a portfolio. And then that's how we'll now be able to lend to them ultimately for that particular purpose. So you will walk into KCB, someone else will walk, they'll have 1,000 mortgages, then those ones now will come to KMRC as a package, and that's what we'll refinance. So we are basically complementing the banks and circles. We're not competing with them. We are just complementing what they are doing and working with them for better home ownership in Kenya. Thank you.
Okay, thank you for that. And from my understanding, also, KMRC, you've actually talked about it all as well. The fact of risk sharing facility that KMRC is coming up. Can you take us through that facility? What is the progress of it and how will it be operationalized?
The risk sharing facility is actually a financial tool that then enables the lender to share risk with an institution. So what KMRC is doing, we're coming up with a risk-sharing facility, which will be a trust, and KMRC will be the corporate trustee. What we'll hope to achieve is that that trust will be sharing the risk with the primary mortgage lender so that if they do not want to lend to you because they consider you risky, then the trust will come in and tell them, by the way, just proceed and lend to this person. And in case they default, then this is how we'll share them the default, all the loss for that particular purpose. And therefore, it means ultimately, upon full operationalization, then it will increase the amount available for lending, especially to those that are considered low income. Now, what is the progress so far? We opted to do this through a consultant. We brought in a consultant board and is the one who is working on the framework. So far, many of the key stakeholders have been engaged, most of them being primary mortgage lenders, then to just understand from their perspective how they want this to work. So once they're done with their engagements with the key stakeholders, then now they go and do an initial framework. That framework will then be discussed by all stakeholders so that then we just try and hear everybody out, after which now we'll incorporate the comments that will have come in so that then we finalize the trust. So I think as in KMRC has made very good progress in terms of the RSF, and we are hoping soon as possible as we start maybe the second half of the year, there will have been significant progress. Upon operationalization, then we are expecting to see a significant increase in the number of Kenyans accessing mortgages because we'll have encouraged banks and circles to move lower down market because then the risk of default is shared. Thank you.
And so I will go to only tell the misconception of people having to seek mortgage. If you tell a Kenyan to go look for a mortgage, especially those who are not in the formal sector, they'll always be shy of coming to ask for a mortgage or going to seek for a mortgage to afford their homes. So there's that misconception about people accessing affordable mortgage financing. However, going to, like we said, to provide these affordable mortgage loans, and that is at a single digit. What is the spread between the KMRC rates and the bank's rates so far right now?
Actually, take that into perspective. So you will find that even as we are seeking to address home ownership in general, we still cannot address the entire market's needs and all Kenya's needs for sure. The rental market will still be there. That will not go away. But we are saying there is that gap within the home ownership space that has been created because of lack of affordable funding. And what KMRC is coming to do is to fill that gap of affordable funding. Currently, the mortgage market in Kenya contributes about 2.5% of our GDP compared to 70% in the US. Now, it means that we have such a big opportunity to expand this space. But we are not saying that all Kenyans want own homes. Of course, some would want to be renters, which is still fine if that is what they want. But we're saying with the gap that we have identified, and we have done our surveys and we have talked to Kenyans, we're saying who are talking about the cost of funding. Developers at the same time are also speaking about cost of funding. So we have been able to identify partners who are working with us to give us affordable concessional funding so that we can be able to transfer the same benefit to the Kenyan, to the end customer, to be able to afford this home affordable. What we are saying is our rate being less than 10% varies. It varies so much with what is in the market. The banks and circles, especially the banks, their base rate is usually the CBR rate, CBR being the central bank rate. Now, the central bank rates keeps changing based on the macroeconomic conditions. And as of now, we have seen the rates going as high as 24% in some institutions. Now, when you compare 24% with what we are offering of less than 10%, that is a really big margin. And it means that is a benefit that the end customer, in this case, the Kenyan, is getting in terms of being able to obtain an affordable way of owning their home. And so that is the solution that we're providing. We're saying that we are coming here to give you a stable source of funding to be able to own your home in a more affordable way and to take advantage of the relationships and the collaborations and partnerships that KMRC together with the government of Kenya have come up with their partner who are multilateral agents to help us harness this space in terms of helping the Kenyans be able to own their own home and those who are able. Now, you will find for the longest time, most of the Kenyans thought that home ownership is not within their purview. Hiyo ni ya watu wengine, wale wanaweza kulipa hizo pesa nyingi. But what we are saying is home ownership is for every Kenyan. Even when you thought that you were not able to reach that bit, because of the products and the funding that KMRC has brought on board, then any Kenyan should be able to pride themselves that they can be able to be a homeowner if that is what they desire to do, actually own their own home. So what we're saying is that please visit our partner banks and circles. We are not working with all banks and circles for now. We have 8 banks and 11 circles that we are working with. And probably I can just mention them very fast. In terms of bank, we have KCB, NCBA, Stanbic Bank, ABSA, Hope Bank, HFC, Credit Bank, GTB, and WFT as a microfinance bank. In terms of circles, we have Kulima, Safaricom, Unitas, Stima Sacco, Imarika, Imarisha, Tower Sacco, Harambe Sacco, Mwalimu Sacco, Bingwa Sacco, and Kenya Police Sacco. So these are the institutions we are working with for now, of course, with the possibility of actually expanding this landscape to include probably other banks. I don't know whether I've been able to address that question fully, Namzia.
Yeah, you have. I was also about to ask if you're going to onboard any more PMLs and circles, and you've answered that well. Let me look at the questions that you may have here so that you see what you can answer. Kevin is asking, why do banks make answer over a KMRC mortgage at 9.5% for the past 9 years and a variable rate for the remaining years?
So I'll take that. So when KMRC was coming on board, the average term was 8 years or less. And part of the funding that was provided as part of boosting the liquidity and encouraging the institutions to on-lend, we gave them funding. But remember, at that particular time, the funding, the tenor of those, or the period of those loans was actually less than 8 years. And part of the achievement that we've actually seen from the market trend is that tenor has actually increased to between 11.5, 12, 13%. And as Olive mentioned, we actually want to push it to 20, 25 years. Now, from our understanding is that maybe the funding that they accessed initially was for 9 years. But remember, as they continue on lending, they'll be on lending this money for longer periods of time. So we expect that within the second, third year, they'll actually have generated more loans that are longer term. And at that particular time, then they'll be able to provide much longer term funding, because ultimately for the bank, they want to match that particular loan to a source of funding that they will get from somewhere. And that is what is called matching your assets to your liability, so that then you're able to match the loan that you are giving, which is an asset, to a liability. So if I give you a 9-year loan, I need to have a 9-year source of funding somewhere that then will be able to match that particular loan. So ABSA accessed money for 9 years initially, but because of the continued increase and lengthening of the tenor, we expect that the tenor will continue increasing up to 20, 25 years. And the fact that it is variable after 9 years, we expect that before then, they'll actually have lengthened the period of the fixed rate loan, because part of the value propositions for KMRC is actually a fixed rate loan for 20-25 years, which is what then we're encouraging these institutions to move into. Thank you.
So let us to look at what are the kind of innovative solutions that are there that KMRC is looking at, if you've not mentioned it before. But before that, I see someone has asked here about how many mortgages have KMRC refinanced to date since its inception. Maybe you can check that and then you just tell us what kind of innovative solution is KMRC coming up other than the risk sharing facility that is in progress.
Okay. Thank you, Nancy. Just to ride on what Eric has talked about and actually what he said earlier. So far, with the 10.4 billion that we have refinanced, that has led to about 3,300 mortgages. He had actually given the number when we were starting. So for that question, the answer is about 3,300 mortgages so far in terms of those who have been beneficiaries of that refinancing. In terms of innovative solutions, of course, risk sharing facility is one of them. Besides that, we are looking at other solutions that we can provide. We are talking with our stakeholders because one of the pain points that has come about in terms of the whole housing ecosystem is that whilst KMRC is operating on the demand side, we cannot operate in isolation with the supply side. So it is a whole ecosystem. So when the developers are having trouble and are struggling with funding, affordable funding to put up the supply of these houses, then that will affect the demand side. In this case, KMRC being able to give out those home loans because there will be no house to be bought. So there will be no home loan to be given out. So we are engaging with our partner to see how probably we can come up with solutions to help developers be able to also access affordable funding so that the developments they gain, if they need funding to actually put up those developments, it is able to translate directly towards a mortgage. So probably they are able to identify off-takers, Kenyans who want to buy, and then we can issue what we call off-plan mortgages. But that has got to go through a whole vetting process. The developer must be someone who is credible, has a track record. But that is something that is in the discussion stage, and we are still engaging with the stakeholders to see how that works. Because as a wholesale lender and non-deposit taking, we can only lend through our partner banks or SACCOs. So even as we do that, we can only do that through the banks and SACCOs. And so it is still something that is in the discussion phase, and we are hoping that we can be able to provide a solution to the market in the near future. Thank you. I see. And then also just to add that our funding is available for buy or build. It's just not buying a home that is already built by a developer. It is also for building. If you would want to build your own house and you already have the land with a title, then that funding is available for you as well. Thank you.
Thank you, Alim, for that. We have another question here from the audience. That is, Culture is asking, isn't KMRC relying on the kindness of foreign strangers for lower cost funding? And if the Kenya Treasury is paying 17% on ISBs, how Kenyans are going to lend at less than 17% to KMRC? Eric, you can take that.
Yes, I will. Thank you, Namsia. Yes, the government is paying 17% on IFB, but then that is local funding. And remember, it's a market economy where the forces of demand and supply dictate the prices. And therefore, when there's a lot of domestic borrowing, of course, then because the demand is high for that money, then it means you'll price your funding higher. And therefore, that's why local and domestic borrowing is actually very expensive. But remember, KMRC is not relying on locally sourced funding. We've just mentioned that our source of funding is actually concessional funding. So we've gone to the World Bank and the African Development Bank. They've lent to the government of Kenya. And because it's not domestic funding, it's actually very cheap. When you look at the rate between multilateral institutions and sovereign countries, the rates actually range from even less than 2% to, I think the highest that I've heard of is around 5 to 6%. So we are not really relying on external foreigners to do this, but then the funding that we have is actually available for the next 25 years. It's already fixed for that particular period. And that's why we are able to transfer that particular benefit to Kenyans, because then it is fixed on our end and we're able to fix it on the PML, and the PML is able to fix it on your end. And so I think that differentiates it. If we were to start borrowing locally, then of course those rates would be a bit higher. But because it's sovereign and from development finance institutions who are not necessarily made for profit, then that's why we're able to enjoy those very low rates. Thank you.
Now that you guys are giving at less than 10%, if you're giving the less than 10%, is it to the end user or to the bank? And is that possibility when the bank gives you the mortgage, and that possibility that KMRC can say to take it over, because you're facilitating the banks, you're funding the banks which are giving mortgages. They come with a portfolio of mortgages to you. So can KMRC also refuse to take up the mortgages that the banks or the circles come with to you?
Okay, so just to take that, and actually mentioned it earlier that we are lending to the banks and circles at less than 6%. So the less than 10% they are getting is to the end customer who goes down to the bank to obtain it. So you as an individual, NAMSIA, if you go to your bank today and you say you want the KMRC funding, they will give you a rate that is less than 10 because they have accessed our funding at less than 6%. So that is the arrangement. So their spread now is between the less than 6 to just about the less than 10 that they offer. So they already have their spread there. So for every Kenyan, they will get it at less than 10.
A different question is asking, what is KMRC doing to ensure we don't have subprime mortgages that have the potential of destabilizing the real estate sector?
So I think the fact that we are going further down and we are trying to help Kenyans to own their own home doesn't mean that we are negating the responsibility we have to make sure that these homes are stable, they are to the environmental requirement, the social requirements, and even part of that also part of their credit appraisal is that, and I was very clear that one of the things that is very clear for you to be able to access a home loan is that you've got to have a consistent source of income. So there's got to be a track record of where your income is coming from. It doesn't have to be salaried, but there has to be a track record of the consistency of your income. So what we say is, if you have been paying rent for the last 10 years, we believe you have the intention to continue paying rent. And so if you want to convert that from paying rent to paying a home loan, then that is something we can be able to offer you. So there is still a credit appraisal process that you as an individual have to go through to be able to confirm that you are able to make those payments. Now, see, if you're self-employed, you're in informal sector, whilst our product is going up to 25 years, you will find as part of the credit appraisal process and to accommodate for risk, the financial institution may choose to give you 15 years. That is within the 25 years. So that is still very good, but it's because they have factored risk, they have factored the consistency of the income, they have factored any uncertainties that may arise in between to be able to help you to be able to protect themselves. So they price that in the rate they will give you, which is still less than 10%. And then now they are able to price that through either the tenure that they give you, that either it's a lower tenure that now takes care of their risk. We do not expect to see a rising of subprime mortgages because we are still going to be very keen in terms of ensuring that the home loans we offer still at the basic principles of lending. And us going further downstream doesn't mean that we are going to deviate from that. So we have every intention to maintain that. And it's not that we are going to walk home loans for streets. No, we're not going to do that. That's not the intention. The intention is to make sure that you as an individual are serious enough and are responsible enough to be able to meet your obligations, even when you're given that home loan.
Thank you, Ali. Now, looking at KMRC's future outlook, we have this generation that is coming, a future generation of Gen Zs and younger millennials. And these are people who want things that come to them faster at a shorter period or something like that. So I don't know if KMRC is looking into the future of that so that we continue having affordable housing and people can probably afford the houses at a younger age. So what is the outlook for KMRC, apart from that only? And what are the goals and strategies to further increase access to this affordable home ownership, especially to the coming young generation?
Yeah, so thank you, Namsi. I'll take that. Yes, I think one of the things we need to appreciate is that mortgage is a long-term loan. And part of what KMRC is actually dealing with is because mortgages have basically been short-term in nature because banks and circles have not had enough long-term funding for them to be able to lend to you long-term. Now, if you see the fact that there's long-term mortgage doesn't mean you can't access that money within a shorter period of time. Only that, the shorter the tenor, then the higher the repayment. So the question is, if someone is leaving university today, would they be able to afford 60,000 repayment? Because remember, as Olive mentioned, our intention is that the amount of money that you are paying for rent should actually be able to convert you to a home owner. You pay the same amount of money, toward owning home. So part of what we have been doing, besides coming up with the various products that we are considering, and I think Oliver's already mentioned those, very close partnerships with the supply side to just encourage much more supply of houses, because then when there's more supply, of course, we're expecting that the prices will decline. But I think there's also a responsibility in terms of continual development and training and capacity building to just then let people understand the nature and the value addition of owning a home as compared to renting, and encouraging and accepting the fact that a mortgage is a long-term loan, and if you choose to pay it short-term, it's actually not affordable because then the payments are very high. So we are considering very many other products, all geared toward encouraging home ownership, and I would appeal to the younger generation. If you are paying a mortgage or a rent of around 20,000, you can actually be able to own a house, because from our computations, if you get a million shillings today at 9.5%, for 15 years, it's actually 10,500. And if you increase that to 20 years, it's actually 9,300. So meaning, if you are paying rent today of 10,500 shillings, it means you're able to afford a 1 million house. If you are paying 20,000, it means you can afford a 2 million house for 15 years at 9.5%. And so I think it's something that's worth thinking about, worth considering, and ultimately knowing that the value addition of owning a home is actually that you increase your balance sheet, you have access to equity, and therefore you are better off owning a home than, of course, renting. Thank you.
Still on you, we saw in 2023 where the Kenya shilling depreciated by 30% versus the USD. Who absorbed the forex losses on these shillings loans?
I'll take that. Thank you, Namsias. I think, and this is where government has really come in handy. The money from the World Bank will come to the government in foreign currency. Then the government will transfer that money to KMRC in Kenya shillings. Now, we pay back to Treasury the amount of money that we receive in Kenya shillings. And it was very intentional, so that then we are able to price appropriately for longer. And so, to just answer your question, KMRC has got no exposure whatsoever in terms of foreign currency, because we don't deal in foreign currency. We receive our money in local currency from government, and we'll pay the government back in local currency. And therefore, the foreign exchange bit then it means has been taken care of by the government. Thank you.
Thank you, Eric. And Olive, I think you can check this. Someone is asking here, why don't you work with the mass employers like TSC by introducing mortgages with affordable interest like 3%, just like other government employees? I think this is someone who sees that other government departments maybe give the employees a cheaper loans. So he's asking, is KMRC looking into that? Like maybe you work with the employers like TSC have very many employees and give them affordable cheaper loans than even the 6%.
I'm wondering whether to say no or yes, but as it let's just say it's simple answer, no. Because we lend through our partner banks and circles. The only one who can have that arrangement is our partner bank and circle. So let's say, for example, the ABSA is the one that can approach TSC and offer them and tell them, we have this funding, we have this amount, and we are going to provide to you a scheme rate, but it will be within the less than 10% rate. Because remember, ABSA is borrowing from us at less than 6%. So already it is not even within the 3%, because us, we are borrowing from the government at 4.5%. So we're borrowing at 4.5%. Then we have our administrative costs of up to 1%, and then we need partner banks and circles. I know it seems like a long process, but for you to be able to consolidate funding for various financiers, you need a vehicle that will be able to do that and now be able to disseminate that funding to now the retail lenders, in this case, the banks and circles. KMRC was licensed by the Central Bank of Kenya as a wholesale non-deposit taking financial institution. So non-deposit taking means we cannot lend to the end customer. We have to go through an already existing financial institution that is front facing to the end customer, who is retail. And this is now where we partner with our banks and circles. And that now we become now the vehicle that is able to consolidate funding from various financials. We speak with various stakeholders across different regions, areas, the multilateral agencies, probably other bilateral countries, and through the government, we are able now to consolidate that funding and be able to lend it out together. So we definitely would not be in a position to issue what the example they've given is like a scheme loan. Scheme loans, usually you agree with them with your financial, in this case, specifically the financial institution could be a bank, could be a circle. So that arrangement can only be done through the bank or the circle. But of course, now the bank or SACCO also has to look at their cost of funding. So if their cost of funding is, say, for example, 5-6%, then there is no way they can lend for less than that. So there is 5 or 6%. They price their risk, they price their margin, then they offer that now too. But they can always come up with arrangements with the big institutions like TSC, but within now a rate that would make sense to the financial institutions, say, for example, 9.5%. Yeah, they can always have those arrangements.
What I'm guessing is me as an individual or a teacher, probably, or a different employee, I gather the rest of us, we go to KCB and tell KCB, can you offer us this mortgage for KMRC? That's what I'm getting, because they are the people who give the loans to individuals.
Yes, that is it. It can even go further. Let's say, for example, Wango Capital as an employer can have an arrangement with, say, for example, KCB. Wango Capital, because it is an employer of choice, they want to enhance their HR benefits to their staff. They can go to KCB and tell them, we want my employees to benefit from this KMRC funding. And I want to make an arrangement with you as the employer to be able to offer them. That is something that you can do. Other institutions, MSMEs, they can have those arrangements with their respective banks or circles. That option is there.
And we have another question from Barbara, who is asking, what is the implication of the proposed housing levy for mortgage payments and overall affordable housing? I tend to understand maybe she's asking about the housing levy. Is its implication in overall or affordable housing?
I'll take that. So the housing levy is part of trying to promote the affordable housing agenda, and it actually cuts across. It will have an implication on the supply side. It has an implication on the demand side. So in terms of supply, ideally the government will get a pool of funding, then that will be available for them to encourage not only to construct, part of actually that funding has been set aside to construct. But again, part of that funding is also available for them to buy houses from developers. So then they tell you, you as a developer, do 100 houses. If Kenyans do not buy these houses, then I have this assured pool of funding here that I'll be able to use for me to buy the houses from you. And so there's a ripple effect to not only encourage private developers to build affordable houses, but also generally promote the supply of affordable housing. And the regulations are being developed, so it has not really been operationalized fully. But from the interim, given that there will be a lot of construction of houses, then we are expecting that the supply of houses will increase, therefore leading to a decrease in demand and therefore much more affordable house to the Kenyan population. Thank you.
I can see time is almost running out, but as we go to the end of this special, maybe you can tell us some of the examples of the success stories of MRC with your partners.
In our website, we have put up our annual report for last year, and we spoke to a couple of beneficiaries of our product, and they've been very clear. And even last year, we also had our annual conference where we had one of the beneficiaries through Uniters, another beneficiary through Sako, who have spoken very articulately about how before they were able to access this funding, they were looking left, right, and center for funding where they'll be able to afford. Of course, the default is usually to save some money. Try and save, and you realize you're not able to save enough to actually buy your own house. But when they were able to approach our partner institutions, in this case, TIMA and Uniters, they were really impressed with the rates. Let's just say that, because they had done their homework. What I find about housing is that it's a very personal journey. One, housing is capital intensive, and so it has a lot of emotions that go through it when you're trying to buy your own house or you're trying to build your own house. So it is a very personalized journey, and someone has to take that time, actually do their homework to look for the houses, to identify the place they want to buy. You identify this, you go, you try and have a negotiation, it falls through the crack, you go identify another place. It can be quite a daunting process, actually, when you think about it. But when you find that house that you want, what we are saying as KMRC and through our partner banks and circles is that we will be able to provide you that funding to be able to buy or build that house that you want. And so in that case, there have been a lot of success stories in terms of those who have been beneficiaries. They're really grateful because of the rate they have been able to get. the rate being fixed. It is not variable. The rates that the commercial banks are offering currently. And also it gives them a sense of stability. They know that this money I'm paying on a monthly basis will remain like this for the next 15 years. And if you opt to pay it sooner, you have that option as well to fast track your repayment. In terms of whether it has been a benefit to many, yes, it has. And those stories are there. If you visit definitely our website, you'll be able to see some of those stories that have been documented. And we'll keep documenting more because we keep talking to the stakeholders, the beneficiaries, the developers, just to see where we can continue offering solutions to them. Now, as part of, just to add, there's something that Eric talked about in terms of the benefit of getting a home loan long term. Now, I also wanted to add that in our tax policies in Kenya, they allow any individual who has a home loan also benefit from what we call mortgage. So Eric gave an example of probably you're buying that house for 2 million, let's say 3 million. And 3 million repayment would be about 30,000. Now, mortgage relief per the Income Tax Act, you're allowed up to 25,000 mortgage relief per month. So per annum, that comes to about 300,000. So let's say, for example, your mortgage repayment is 30,000. Probably you would be able to qualify for mortgage relief of 10,000 because mortgage relief is on the interest. That interest bit of the mortgage, what you're being given relief up to 25,000. Out of the 30,000 you're paying as a mortgage or your home loan, we send 10,000 the interest bit, or even 20,000 because initially some of those repayments, when you look at the repayment schedule, it is reversed. You start paying the interest, higher interest first, and then it goes reducing up. And so that interest benefit, you will be able to benefit in terms of tax. So it is reduced in your tax. So you have a tax benefit of 10,000. And then the net effect will mean that the mortgage that you pay is 20,000 as opposed to 30, you'll be paying 20 because you've gotten a relief for 10,000. Now, if that's not a benefit that you would not want to take advantage of, I would really be surprised what other benefits you want. And besides that, there are other benefits. There is a stamp duty exemption for first-time homeowners. Now, this one, of course, has additional requirements. So you must be a first-time homeowner. The government is still trying to find a mechanism of identifying who is a first-time owner. And in addition to that, the house that you buy should fall within the affordable housing scheme. And so that means as a developer, you have registered with the State Department of Housing as a developer of affordable houses, something like that. So there are quite a number of benefits that you will be able to get when you decide to actually go for a home loan within the affordable housing. And so that is something I would encourage, of course, all Kenyans to venture of. Thank you, Ramsey.
Okay, thank you for that insight. Personally, I was not aware of some of the things that you just mentioned. And I think as a newish institution, there's so much that needs to be talked about in terms of mortgage and accessibility and affordability of mortgages, so that people can be aware that they can access affordable home loans, actually. I can see we don't have any more questions. Maybe you can just give us a closing remarks. We can start with you, Olive, as you iterate on the KMRC's value proposition before we close this question.
I think I just want to encourage all those who are listening, consider getting your own home if you don't have one. If you do, please share the message with the people within your circles. Could be your brothers, your sisters, your family, your friends, that there is a way of owning your own home at an accessible and affordable way. And that is through KMRC funding, single digits, fixed rate for a long repayment period of up to 25 years. And you will not regret, because then again, it is actually a way of building your wealth. You build your wealth. Once you're able to repay the loan, that house becomes an asset. You can get an additional loan for weeks. In terms of you use your house as a security, you get additional funding, and you keep building yourself and growing yourself as an individual. So we are offering this solution. It is for all Kenya. Please run with it. I think I want to mention our partner banks and circles again. So that you're aware of who we are working with. Of course, there is a possibility of onboarding others in the near future, but for now, we are working with KCB, NCBA, Stanbic Bank, ABSA, Hope Bank, HFC, that is Housing Finance, and then credit banks, DTB and KWFT, Microfinance Bank. And then for the circles, we have Ukulima, Safaricom, Unitas, Stima Circle, Imarika Circle, Imarisha Circle, Tower Circle, Harambe, Mwalimu, Bingwa Circle, and Kenya Police. So these are the institutions we are working with currently. Please feel free to approach any of them and ask them whether they are offering a home loan using the KMRC funding. Thank you, and looking forward to seeing more Kenyans on the boards. Thank you.
Thank you, Olive. Eric has give us your final remarks. Please tell us how we should maximize the KMRC mortgage loans, because even in my circle, most people are not aware of who are KMRC and what they do and all that. So you can emphasize on that as you give us the closing remarks as well.
I think on our part, we'll continue to talk about KMRC and preach the home ownership gospel, because that's what we are mandated to do. And we'll continuously tell Kenyans about us. And I think those of us that have been on us in this Twitter space, I think you can now become our ambassador. Feel free to reach out to us. Our website has got all the information that you need. It has the primary mortgage lenders that we have on board. It has a catalog that has a listing of the houses that are available. It has our telephone numbers just in case you want to get in touch with us. There's an email there, both info and communication, which of course is manned daily, and you're able to get as much information as you need. And so I'll encourage us all. I think information is power. Now that we have the information about KMRC, I think it's upon us now to take the action. It's like we are having a call to action moment. And I would like to encourage us all, as long as you're a Kenyan, whether resident or non-resident, KMRC is for you and is here to help you in your home ownership journey. As Olive mentioned, those are the PMLs that we are working with, but we are onboarding more as we proceed, hopefully, and feel part and parcel of us. And I would just want to encourage everybody, get the information that you need, know what you want in terms of location, cost, and then because the financial institution is meant to identify a specific or to sort a specific problem, now approach them at least with an idea of, this is where I've seen the house I want, this is the approximate cost, and then you can do the maths and you'll have started your home ownership journey. Thank you. Looking forward to having us all as home owners. Thank you.
Thank you so much, Eric, for that as well. And thank you, Oli. Good to have you on our spaces this Thursday. We look forward to having you more and more on spaces to talk about home ownership. Thanks everyone else in the audience who are able to grace this occasion as well. We hope that you go and visit your lenders, talk to your banks. Olive has mentioned almost all the major banks. In our circles as well, the major circles. Let's talk to our mortgage lender and ask for the KMRC loan, which we've been told it is very affordable, 1 digit. And we look forward to having affordable housing going forward. Thank you, everyone, and have a good night.